Hey, I'm Jusko from ProudMoney.com. Chime Bank has a new credit builder secured Visa out that is almost perfect for people that are trying to build or rebuild their credit. It only has one little problem that we'll talk about. But before we do any of that, I'm going to ask you to please subscribe to this YouTube channel if you have not already. And if you have already, I thank you for doing so. So the fintech financial technology bank, Chime Bank, has a new credit card out called the Chime Credit Builder Secured Visa, and I think they really have the potential to have a huge hit on their hands. And I could see there being copycats in the future, and maybe even some of the big banks adopting this model over time. Now, if you are someone that is building or rebuilding credit, new to credit, any of those things, this is something that could be very exciting for you. So if you are someone that is working religiously on that credit score, you may already know how a regular secured card works, and it is different than how the Chime Bank secured card is going to work. But a regular secured card, you have to put down a security deposit in order to get the credit card. So you put down a security deposit, and they give you a credit line that is the same as that security deposit, but that security deposit gets squirreled away over here somewhere, and you don't get it back until you don't want that card anymore, or until they upgrade you to an unsecured card. So you have to put up money just to get a credit card, and then you just spend on that credit card, and you still have to make your payments and everything, and that money that you originally put there as that security deposit still is off there somewhere. So in some ways it almost feels like you have to pay twice, right? You have to put down a security deposit, and then you have to pay for the purchases that you make on that credit card. But the Chime Bank Credit Builder secured card works a little differently. It is still a secured credit card, but the way they have set it up, it feels more like a debit card that is reporting to the major credit bureaus and helping you build your credit. And so the way that works is you first have to have a Chime spending account. They call it a Chime spending account, but essentially what that is you establish what would normally be a checking account or a bank account that you would, maybe have a debit card and pull out of. So a regular bank account. So you have to have a regular bank account with Chime Bank. And then you can get also on top of that this secured card, this credit builder Visa from Chime Bank. And the way it works is you have to, instead of putting a security deposit down that they take and then squirrel off to some black hole and you'll never see it again, you move money from your bank account that you have with them, that spending account, into the credit builder account, and then you are sort of like prepaying for the things that you buy with your secured card. So they don't hold that money and then never give it back to you until you don't have the card anymore. Instead, what they do is they take that money, they kind of hold it in reserve as the money that is going to pay off the purchases that you make for the next month. So they have that money. You use that secured card just like you would any other credit or debit card, knowing that you have a limit, whether you want to think of it as your credit limit or you want to think of it as the, how much you have in your bank account. You know that X number of dollars has been put into that account, and you can only charge up to that amount. So what happens is you use it just like that. You could think of it like a debit card, but what is actually happening sort of behind the scenes is when you get to the end of the month, then Chime automatically pays off your balance. So it feels to you like you've been taking money out as sort of a debit situation, but for them, they've really just been holding that money in reserve and showing you a lower and lower credit limit or account balance, however you want to think of it. They then pay off everything that you have bought over that month, and then they report your on-time payment to the three major credit bureaus, TransUnion, Equifax, and Experian, and over time that can help you build your credit score. So again, by putting that money on that credit builder Visa, what you are doing is essentially paying in advance for your purchases in order to have the ability to make it function like a credit card. But for you, it's just like using a debit card, and a lot of people prefer to use a debit card, but they would like to have the credit building advantage of a credit card. So Chime Bank is just holding that money there, and you make your purchases, and then at the end of the month they pay them all off using that money you've already put in. Now when you're done, that means you've got to put more money in the next month from that other Chime Bank account that you have. But it also means that you're never putting a security deposit down in the way that you would with a regular secured card, because you're not putting money away that then doesn't get touched and then you have to pay for your purchases. Instead, you are taking money, putting it in reserve, and then paying off your purchases with that money, which is different. So it feels more like a debit card or a prepaid card, but it functions like a credit card in that it reports to the major credit bureaus and it can help your credit score, which a regular debit card cannot do. And then if you are someone that doesn't like credit cards because you are worried you might go into debt, you don't necessarily trust yourself with a credit card, this is a credit card that will not let you go into debt. So you have already put the money from your regular bank account against those purchases that you are going to make, and they are paid off just like a debit card. So you cannot go into debt with this particular credit card. So it's a pretty cool idea, but it probably opens up some questions. So I'm going to tackle some of the things that you're probably already thinking of. Number one, this is a credit card that has no annual fee, and it has no other fees of any kind either. Number two, it has no interest rate, or you could think of it as a 0% interest rate if you want to think of it that way, because you do not actually ever have the option to revolve a balance. So you're never going to go into debt, so there's no interest ever to pay. And number three, since you can't revolve your balances, that means your complete balance gets paid off every month. So in that way, this card is really more like a charge card that forces you to pay off everything every month instead of revolving balances and getting interest. Number four is the fact that there is no credit check with this card. So if you are worried about having a hard inquiry on your credit report that could ding your credit score a little bit, well then that's not going to be an issue with this card. They're not going to do a credit check, partially because, or maybe mostly because of the fact that you already are putting up the money in advance to pay off your credit card every month. Number five, although Chime does not call this a guaranteed approval card, it is hard to imagine that too many people would be turned down for it because of the way it is constructed. You're taking money from your bank account and essentially putting it up in advance to pay for your credit card purchases. So there's really, it's kind of a foolproof system. You know that the person is going to pay, and it's very difficult to skip out on paying for what they put on their credit card. Number six is the fact that your credit limit can be whatever you want it to be in a particular month because of the fact that you are deciding to move money from your bank account into the credit card account and have it sitting there waiting to pay off whatever you're going to put on the card in that particular month. So with a standard secured card, obviously you have put a security deposit down, and then you have a credit limit, which is the same usually as whatever you put down to begin with, which is a little bit constricting because you don't necessarily want to put too much money down because you know you don't get to have that money again until you get rid of the card. So most people keep a fairly low balance in a normal secured card. In this case, you could increase it or decrease it as you go along, which allows you to make whatever purchases you want to make on that card every month. Chime has actually already been beta testing the Credit Builder account with a good number of existing Chime customers, and they did a study in late 2019 along with TransUnion and found that on average, those customers were seeing a 30-point increase in their credit scores over just a 3-month period with this. Now obviously people have a wider credit picture than just one card, so it's hard to say that it would be only this card that is creating it, but by looking obviously at those customers and seeing the way their credit scores increase, you have to imagine that this is at least a significant part of those increases. Now there are two small potential downsides to this card that I want to talk about, and one bigger potential downside that could make it a deal breaker for you. But let's tackle those small potential problems first. Number one is the fact that there are no rewards on this card. So some secured credit cards do have rewards, this one does not. But because most secured credit cards require you to put a security deposit down, and you don't usually want to put down a ton for a secured credit card, you usually have a fairly small credit line, which means you can't charge very much, which means you don't earn very much in rewards. So I don't see that as a big downside to this card. Number two is the fact of how it gets reported to the credit reporting agencies, because like I said, this card sort of works like a charge card. You don't have a credit line that is being established established in terms of getting, you know, $500 or $1,000 or whatever, and then having, you know, a piece of that that you use every month. So normally part of your credit score is your credit utilization. How much of your credit lines are you using? If you have $1,000 and you're using, you know, you made $100 in charges and that's 10%. With this card, that just doesn't get reported at all. It's not part of what the credit reporting agencies are getting from this card. So they will learn about your on-time payments and other things that go into your credit score, but that credit utilization piece does not come into play either for good or for evil as far as this card goes. So if that's something that matters to you, you want that credit utilization piece to be reported to the credit reporting agencies, this is one card that won't do it. And then that one big potential downside that I have kept from you this whole video up until this point is the fact that in order to get this card, you not only have to have that Chime bank account, but you have to have a direct deposit coming into that bank account of at least $200 every month. So basically what Chime is doing here by offering you kind of a sweet deal with this secured card is they are also saying that you almost have to become a regular customer of Chime banking, because for most people, if you are going to have a payroll direct deposit going into any bank, that usually means that is going to be the main money that you make in your life. And so if your job is putting the direct deposit money into the Chime account, well, now Chime has become sort of your main bank. And so for Chime, that's really good. They are getting you as a sort of, you know, regular banking customer, and then you would have the potential to get a hold of this card if you want to build your credit. But if you don't want Chime to be your #1 bank and you don't want that, well, then you don't have any access to this credit builder account. And so that is something that is obviously a potential downside. If you're already happy with your bank, or you don't want to deal with a bank that, you know, doesn't have branches and is, you know, essentially just an online bank, well, then this might not make you very happy. Now, if you somehow have the ability to, you know, have multiple checks coming into your life, and you've got, you know, a payroll check of at least $200 that you can have go in there once a month, well, then maybe you can have this as a second bank in order to get this. But I think for most people that would mean it would have to become their main bank, and I think for some people they're not going to want that. As I make this video, there is a waiting list to get the credit builder account from Chime Bank. You have to be an existing Chime customer. I assume over time they'll probably open it to all Chime customers, but if you want to be on that waiting list, you're gonna have to become a Chime bank account customer first to even get on the waiting list. So that is, maybe that's another potential downside that I didn't get to, but that is how it works as I make this video. But overall, a pretty cool idea from Chime Bank. You're getting a card that can help you build credit, and you won't go into debt with the card. You don't have to put a security deposit down that you just wave bye-bye to until you no longer want the card anymore. So if you're someone new to credit or rebuilding credit, this is really, you know, an opportunity to do it very easily without a hit to your credit score, all of those sort of things. However, there is that downside of the fact that you essentially are being forced to become a Chime customer, not in a small way, but sort of in a big way, by the fact that you have to have a direct deposit going into that Chime banking account every single month. So that could be a downside for some people, but maybe, you know, if you don't have a regular bank, or, you know, you don't have very much in your bank to begin with, maybe that was just fine with you to go to Chime Bank instead. So I think it's a pretty cool idea, and I think others are going to copy it, and I wouldn't be surprised if others who do copy it don't have that direct deposit facet to it. So even this Chime Bank, it could change over time where you no longer have to have that forced direct deposit every month in order to keep the account. We will see what happens, but I give it a thumbs up at this point. If you have any questions, anything that I did not describe very well, put them in the comments section below, and I will try to answer them. Otherwise, I thank you for watching, and as always, please go to proudmoney.com, where we do, I've already hit my finger, credit card reviews, personal finance news, I don't know, something else. Bye.